Hello everyone and welcome back to my channel. This video will be a little bit controversial, but it's much important than these gurus who tell you that you need to learn supply and demand, you need to learn support and resistance, and it's the holy grail. Moving averages is the holy grail. They are all lying. What's most important in technical analysis is to learn everything. And I will be doing a playlist about how to identify every single technical strategy. Why this is much important than looking for just one, because opportunities come in different shapes during the markets where there is volatility. Sometimes there will be no retracement offered because the rumors are very powerful, the sentiment is not willing to have any retracement, they just push the price. So if you are waiting for a retracement, you will not have the opportunity to enter a trade. Sometimes markets are a little bit quiet, but the fundamentals are saying that this pair should be shorted, but the sentiment is not playing out yet, so you have a better chance to have a retracement into a better price to enter and get much profits. Before we start with the video, don't forget to hit the like button and subscribe. In today's video, we will be talking just about technical analysis. We will not be talking about risk management. So sometimes people mix between strategies, technical analysis and technical strategies, and risk management strategies. I will not be talking about any risk management strategies. If you want me to upload a video about risk management strategies, different strategies, just let me know in the comments. Now let's hop on into some technical analysis. Let's start first with Euro Pound. Euro Pound was bearish from this area right here. So Euro Pound was giving me fundamentally bearish signals from this area right there. Okay, so if I want to use the support and resistance strategy, because fundamentally was giving me short position, but the sentiment was not playing out very well yet, and the economic indicators were somewhat sticky yet, so they did not give powerful rumors that it will get depreciated, this pair will get depreciated. So I was anticipating a retracement before continuation to the downside. So what I do, I can use supply and demand or resistance levels in the trending market to the downside, in the bearish markets. Okay, so I do not use support turning into resistance. I use resistance level because I was anticipating much bigger retracement. You can use also the support turning into a resistance after a shift in market structure. Also it will play out, but there is some nuances if you are expecting better retracement or small retracement. Let's take the example right here. If you want to use the support resistance idea, which we'll be explaining right now, we have one area right here got rejected to the downside, area right there got rejected to the downside, and area right here got rejected to the downside. So this is a huge key level right here, a huge key support and resistance level. This is the support and resistance strategy. This is the resistance level. I anticipate retracement into this area, and then I need an entry model to take an entry position. Okay, so the strategy implies using support and resistance and an entry model. One of the entry models is a candlestick pattern. So if we are having a retracement to a key area that's important for us, we can wait for the last bullish candle to be broken to the downside, and this will be our entry model. So the last bearish candle is right here, and we have this low right there. After break of this low, this will be our entry and stop loss at the highs that were created. Okay, so this will be our entry right here at the break of this low, and this will be our stop loss. Now, the risk management strategy, I will not be talking about it. Reminder, if you want me to upload a video about the risk management strategy, leave a comment down below. This is the entry model, this is the stop loss, and it was based first on fundamental trend. We were bullish on euro pound, that's why we needed areas of confluence to take a short position from, and this was a great resistance area. With the right sentiment, you can enter a position and ride the wave to the downside. Also, on the same chart, if you missed this area right here of resistance, there is something called the dynamic support and resistance, which are the moving averages. I have different moving averages on my charts: 100, 200 and 1825. This is something I use. I don't think anyone ever use it. It will be somewhat controversial, but I really like it for swing trading and some type of reversals and standard deviation. I will not be talking about it in this video. What happened? We were overbought above it, we broke to the downside, and this is dynamic resistance. Also, it could be an entry after we broke to below it, retest it, entry, stop loss, and different take profit for different risk management strategies. This is another way of identifying support and resistance. This is dynamic support and resistance, and it's based on moving averages. Also, if you still want to use some basic support and resistance, we are still in a bearish movement. We have a beautiful break of area right here, and as you can see, 1, 2, 3 touches, 4 touches, and then break to the downside. Retest of this area is an entry, and the break below it is an entry. So different types of entry models. The strategy is the same. Area of support being broken to the downside. After closure below the area of support, you can have a short position having the swing high as your stop loss. Different take profits based on your type of risk management strategy. Another entry model, after break of this support coming into resistance, we have the retest of this area. Also, this is another entry model. We have stop loss above the swing high and targeting different levels. So, different entry models, the same idea, support and resistance. Let's go to another chart to have different types of analysis of support and resistance, because in one chart you can have many technical analysis of support and resistance. Just same ideas. Any bullish candle with bearish candle will form a resistance. Any bearish candle with a bullish candle will form a type of support. If we have a support that's been hit 2, 3, 4 different times, it's a very strong support. If a resistance is hit 3 to 4 times, it's a very resistance area. But keep in mind that this is all based on fundamental trend. Why I anticipate the resistance to not be broken? Because we are in a short trend. Why I anticipate the supports to be broken? Because we are in a short trend. Let's take another example on Euro USD. This was Euro Pound. Now let's hop in the Euro USD. Also, we were short from this high right here at 1.12x approximately, and we were anticipating move to the downside, break of different support areas because of fundamentals. Okay, so if you don't want and you don't have the confidence to enter based on this resistance area right here, so right here we have a resistance area. Okay, let's see, hit 1 time, did not reach it, hit 2 times, so this is 2 times, plus it has the dynamic resistance that I explained it before. You can enter at this high after hit. The bullish candle break into the downside is your entry model, and stop loss above the highs, and hitting different risk areas, different take profits based on your risk management strategies. If you don't want and you don't have the confidence to enter at this high, you can wait for a support area to be broken. This is a very fundamental support area. 1, 2, 3, 4 different, and also here trying to break it, did not break it. Very powerful area of support. Since we are fundamentally bearish, we wait for break of this support, or we can anticipate a break of the support, but usually you wait for break of this area. This is your entry, stop loss above this high, and based on your risk tolerance, take profit areas, you have a good position. Okay, so why I did not give you the examples of these resistance being broken? Because I was fundamentally looking for short positions. I was not looking for bearish positions when we came into this area. At this area right here, I was not trading fundamental analysis, so I didn't know what was happening right here. But if I was bullish fundamentally during this time, I would be looking for resistance to be broken and support to be hold. Okay, to hold, support to hold, and resistance to be broken until fundamentals change. So just fast recap, these are different strategies of support and resistance: dynamic support, dynamic resistance. If you want another example, this is great area of resistance, we hit it right here, plus we have the dynamic resistance, which are the moving averages. After break of this low right here, this is our entry, this is our stop loss, and different take profit. Okay, so the idea is that you need a strong conviction, a narrative to short the currency or to long the currency, and based on this narrative you can use this type of support and resistance. We have dynamic and we have static support and resistance. These are static areas, they don't move. This is dynamic. As you can see, the resistance is moving lower. Right here the resistance is moving lower, so this is dynamic support and resistance. This is not the holy grail of technical analysis. This is one of the ways to analyze the charts, and you need to learn them all. You need to learn support and resistance, you need to learn ICT, you need to learn moving averages, you need to learn Fibonacci retracements, you need to learn supply and demand, you need to learn different technical patterns, okay, different candle patterns. You need to learn anything. Why? And everything, because we are not technical traders. So technicals, we use it for just entries that where price might be a good price to enter. All our conviction and all our narrative should be based on fundamental analysis. The charts are the results of a cause. So the charts are the results, prices are the results of what's causing them, which is the fundamental, from inflation to GDP to exports, imports, investments. Okay, so if you know the formula of how interest rates move, how unemployment, labor market moves with the interest rates, how GDP moves with interest rate, it's called the ISLMPC curve, which is very important for short-term trading currencies. Okay, so today's video will be somewhat controversial because this is one of the best technical analysis, because all technical analysis are best technical strategies when used fundamentally right, with the right fundamentals and with the right trends. If you know we are in a ranging markets, you know what to use. Support and resistance are very powerful in ranging markets because they give you huge prices to enter from. A trendy market, support and resistance very good. Supply and demand, same idea. And also ICT, which is, they call it ICT, but it's really just shift in market structure. So break of structure, retracement into a very powerful bearish or bullish candle where institutions might add some positions. So that's why will be a very huge confluence to enter during this area. Also Fibonacci, if we use Fibonacci 0.382, we have the 6.2, we have the 0.5, the 70s I don't usually use them because we will hit a supply or a support zone. So you need to have dynamic technical strategy, but you need to focus on risk management strategies and fundamental strategies because they are the core concepts of trading. Without them, you never know what's the trend, and you never know how much you will be risking per trade. You never know how to diversify your portfolio, which different currencies that you are willing to trade during this year. So there will be different types of analysis that you need to comprehend and take by heart before you enter the markets. This is the first video of the playlist of technical strategies, and hopefully in the next week I will be uploading the supply and demand technical strategy that I hugely use because they give me very powerful prices to enter the market. If you like this type of content, don't forget to hit the like button and subscribe for weekly videos like this. Until next week, stay safe.